Thank you very much for taking time to watch this video today. My name is Takefumi Yonezawa from Mizuho Financial Group. I have been serving as the Group CFO since this April. Today, I'd like to provide a brief explanation of Mizuho's strategies and financials. Let me start from the summary of the fiscal year 2022 financial results. The third line on the left chart, consolidated net business profits, including net gains related to ETFs and others, which indicates profits from core business, was 807.1 billion yen, a decrease of 46 billion yen from the previous fiscal year. The customer groups increased by 48.8 billion yen year-on-year, exceeding the profit level before the introduction of negative interest rate back in the fiscal year 2015, and posted its record high profit since the introduction of the in-house company system in fiscal year 2016. Non-interest income on domestic retail asset management and capital markets declined due to sluggish domestic and overseas capital markets. However, non-Japanese yen deposit and forex income increased due to the focus on transaction banking, and income from sales and trading increased mainly in the Americas, while stronger borrowing demand after the COVID-19 was a support for the lending interest income. On the other hand, the market segment reported a significant decrease of 19.2 billion yen as a result of conservative risk management under severe market conditions and losses on foreign bonds realized by management intent. Excluding the impact of these losses on foreign bonds, net business profit of 860 billion yen was achieved as planned. Credit-related costs were within the 100 billion yen range of the annual plan and were down 145.8 billion yen from the last fiscal year, when a cost associated to certain large client was recorded. As we made steady progress in selling cross-share holdings, net gains related to stock increased by 130.3 billion yen compared to the last year, when we recorded a large loss on the cancellation of their funds. Net extraordinary gain decreased due to the absence of the large reversion of the employee benefit trust, but the reversion has been steadily accumulating in the current fiscal year 2023. As a result of the above, net income attributable to FG was 555.5 billion yen, an increase of 25 billion yen from the last fiscal year, exceeding the annual plan of 540 billion yen. This page is the financial results shown by in-house company. I will explain about the net business profit of the customers groups, which is the center column. First, despite cost reduction through structural reform efforts, the retail and business banking saw a year-on-year decline of 21.7 billion yen, mainly due to weakness in the asset management-related businesses, which had been strong in the previous fiscal year, reflecting sluggish domestic and overseas stock markets. The corporate and institutional company reported a year-on-year increase due to improved net interest income and expense control, despite weak non-interest income from the capital market-related transactions and others. While non-interest income related to capital markets in Europe and the United States was weaker than expected, the global corporates saw an increase in the deposit income due to higher overseas interest rates, an increase in fees related to FX and derivatives transactions, and an increase in loan income generated by meeting the demand from the blue-chip non-Japanese companies. The increase was 62.8 billion yen from the previous fiscal year. G&A expense increased by 23 billion yen due to inflation and other factors. Next, I will provide an overview of the balance sheet. On the left side of the page, total assets amounted to 254 trillion yen, up 17.1 trillion yen from the end of the previous fiscal year, mainly due to the foreign exchange impact of the weaker yen, as well as an increase in loans mainly overseas and domestic yen deposit. As for the period-end balance of loans at the top right, both domestic corporate and overseas increased slightly compared to the end of the previous fiscal year, but decreased compared to the end of September due to repayments mainly of the overseas short-term loans. As for non-Japanese yen denominated loans and deposits, we have steadily strengthened the quality and quantity of non-Japanese yen deposits in line with the increase in loans, while ensuring flexible management in light of the rapidly tightening monetary policy in the United States and other countries. As a result, the non-Japanese yen denominated loans and deposit ratio was 79%, which continued to exceed the target level of 70% or more. We will continue to pay close attention to loan and deposit trend as well as the funding environment while pursuing stability and profitability through a combination of customer deposit and medium to long-term funding in order to optimize our foreign currency funding operations. This page shows the status of loans in Japan. The average balance, which is shown on the left side of the page, peaked in the first half of fiscal year 2020 and has been declining due to the repayment of COVID-19 related loans, but has remained almost flat since the first half of fiscal year 2022, when the overall balance began to increase, due to factors including a response to working capital needs rising from the weaker yen and rising resources prices. As shown in the upper right graph, the loans and deposit rate margin declined compared to the first half of fiscal year 2022, when the margin rose due to the special factors such as the lump sum posting of the accrued interest income. On the other hand, as shown in the graph below right, after deducting the special factors, the loan spread for both RBC and CSC remained generally flat compared to the first half of fiscal year 2022. This page is showing the status of loan outside Japan. The average balance at the left side of the page shows an overall increase of $15 billion over the first half of fiscal year 2022, with all regions steadily capturing demand for funds, especially from non-Japanese clients. As shown in the graph below right, the loan spread decreased by 3 basis points from the first half of fiscal year 2022, mainly due to the progress in repayment of existing high profitability loans, mainly in Europe and the United States. On the other hand, as shown in the upper right graph, the loan and deposit rate margin increased as a result of an increase in yield on deposit due to non-interest-bearing deposit was suppressed in the comparison with the increase in the yield on loans. This page describes the non-interest income of the customer groups. As mentioned earlier in the in-house company result, and as shown in the graph on the left, GCC saw an increase due to strong performance in credit-related fees and FX and derivatives, while RBC saw a decrease due to weakness in asset management-related business, which had been strong in the previous fiscal year, and CSC also saw a decrease in its solution-related business. As a result, overall non-interest income decreased by 43.9 billion yen from the last fiscal year. Next, I will explain about asset quality. In the left, credit-related cost was 89.3 billion yen versus the annual plan of 100 billion yen, although a forward-looking provision at RBC for future reserves in light of the impact of yen depreciation and commodity price hikes, as well as some expenses incurred by large domestic companies and overseas. Since the business environment is expected to remain uncertain, we will continue our effort to ensure solid credit management. This page is about our portfolio of securities. On the left side of the page, net unrealized gains on the other securities after net deferred hedge applied amounted to 812.4 billion yen, a decrease of 276.6 billion yen from the end of the previous fiscal year. Compared to the end of December, the increase was 190.2 billion yen. Regarding foreign bonds, we booked losses on foreign bonds realized by management intent in the fourth quarter. At the lower right, the reduction of cross-shareholdings totaled 383.8 billion yen as of March 31st, 2023, compared with a target of 450 billion yen over the 5-year period through March 31st, 2024. We disclosed the reduction target in the new midterm business plan, which will be outlined later. We will continue to negotiate with our clients and promote effort for early reduction. This page is the status of Basel regulatory capital. As shown on the left side of the page, all regulatory ratios, including the Common Equity Tier 1 ratio based on the current regulations, are sufficient in comparison with regulatory levels. As shown in the upper right corner, the Common Equity Tier 1 ratio under the new Basel III regulation, which is an important management indicator for a company, on a fully applicable basis increased to 9.5% excluding net unrealized gains/losses on the other security. Now I'd like to explain a plan for fiscal year 2023. On the left side, consolidated net business profit are expected to be 900 billion yen, an increase of 92.9 billion yen from the previous fiscal year. While maintaining a firm upward trend in the top line both domestically and abroad, we will continue to invest in human resources, digital transformation, and other areas for the future growth, as well as investing in the increased costs necessary to address regulatory compliance and to strengthen governance as a matter of course while expecting impact from inflation. The plan for credit-related costs is 100 billion yen, based on the assumption that reasonable amount of expenses will be incurred by clients whose business performance has deteriorated due to the prolonged COVID-19 and by clients who are vulnerable to the recent inflationary effects. Regarding net gain losses related to stocks, we will continue to reduce cross-shareholdings through careful negotiation with our clients, while continuing operation to clean valuation losses on their funds, but plan to achieve a net gain of 60 billion yen. As shown in the table on the upper right of the page, the forecast dividend per share of common stock is 95 yen, an increase of 10 yen from the fiscal year 2022 level based on our return policy of dividend payout ratio of 40%. This is the end of my presentation of the financial results. In the next section, I'd like to briefly touch upon our new midterm business plan, which was announced on May 18th. The current business environment in which we operate has changed dramatically since we formulated our 5-year business plan back in 2018. Example would be a heightened awareness of economic security and a sustainable society, the penetration of AI and other technologies into various areas of society, a review of financial capitalism and social trend toward a new sense of values. In this context, we have decided to revisit our corporate identity and reconsider how Mizuho can contribute to our customers, clients, and society, and find out the meaning of Mizuho's existence for the next 10 years and beyond. While taking into account the very deep and significant changes that are occurring now, we have also decided to move up our 5-year business plan by 1 year and replace it with a newly formulated 3-year midterm business plan at this point. We have sharpened our existing corporate identity and replaced it with a newly established purpose, which is shown at the bottom. Proactively innovate together with clients for a prosperous and sustainable future. Each and every Mizuho employee will expand the circle of challenge and innovation together with our clients and society, and together we will be prosperous. Such a wish is in this purpose. In this video, I'd like to skip the explanation of the new midterm business plan. However, you can find a video which our CEO, Masahiro Kihara, explaining the detail of the new midterm business plan on the investor relations website of Mizuho Financial Group. Just for reference, this is the 5 business areas that we will focus on, as well as 5 business foundations we will enhance in the upcoming 3 fiscal year. This is the target of a new midterm business plan. We will achieve consolidated ROE over 8% at the end of fiscal year 2025, while expecting our consolidated net business profit to be in the range of 1 to 1.1 trillion yen. Again, for details including the scenarios we applied in the plan as well as some roadmaps, please visit our investor relations website and watch a video or presentation made by our CEO. Lastly, I'd like to explain our approach to improve PBR. Mizuho's PBR is currently below 0.6. In order to restore this to more than 1, we believe it will be extremely important to thoroughly improve capital efficiency and foster growth expectations. As I explained, we have set a target of 8% financial ROE and consolidated net profit of 1 trillion to 1.1 trillion yen in our new midterm business plan. On top of that, as shown on the right side of the slide, we will take various steps to achieve these targets. In addition to make steady progress in addressing Mizuho's fundamental factors, we intend to contribute to the growth of the Japanese economy and resolve macro factors through the practice based on our new purpose. This will conclude my presentation. Mizuho would like to listen sincerely to your opinions and voices and will try to reflect them in our business management. If you have any question after watching this video, please contact our investor relations team. You can find their contact information on the investor relations website of Mizuho Financial Group, or please email us to mizuho.ir@mizuhofg.co.jp. Again, thank you very much for taking your time to watch this video. Thank you.